When do investors need to start worrying about inflation?
I feel like this is something we've been talking about for the past 4 or 5 years. And there's been a lot of false positives. We finally think we're starting to see signs of inflation brewing. And when you say inflation, I think a lot of people think, oh my God, it's going to be terrible inflation because of all the money the Fed's pumped in. We actually think it's going to be very reasonable and actually probably some good inflation. That's obviously not good for bonds, but we're starting to see wage inflation pick up just a little bit. Small business associations are starting to raise salaries. That could lead to more broad wage hikes in the broader economy. So we think inflation is going to start picking up as we move through this year, moving towards the Fed's 2% PCE target. So that will focus everything, I think, on the front end of the yield curve for bond investors, and it'll push long rates up as well, but that's where we think the real risk is, at the front end, not the long end.
Morgan Stanley recently put out a note that says the investment grade market is more vulnerable now to rising rates than in the last 30 years. Why is that?
So that's something that I think has been missing from this piece about, bonds are risky in a rising rate environment, is the structure of the market has changed to become more risky. And that's essentially because companies over the last 4 to 5 years, as you know, have been terming out their debt, meaning issuing longer bonds to refinance short maturities. They've been paying lower coupons. So the average coupon in the investment grade market has dropped about 1.5% over the last 4 to 5 years. So from 6% down to 4.5%. That has pushed out the duration of the market by about a full year. So from 6% before the financial crisis, 6 years before the financial crisis to 7 years now. So in essence, the market is more vulnerable to a rise in rates just by a function of its longer duration. So we think that's something investors need to pay really close attention to, is what's the duration of your portfolio, and more likely than not, it's shifted higher over the last couple of years.